Wall Street titans show deepest divergence in years. Buffett bets big on Google. It's no exaggeration to say that the recently released Q3 13F filings reveal the most significant divergence in Wall Street strategy in nearly 2 years. Last quarter, everyone was scrambling for AI leaders, buying at almost any valuation. This quarter, however, heavyweights have clearly split into two opposing camps. The believers, who continue loading up on AI and tech giants, and the skeptics, who are aggressively cutting exposure, or even placing big short bets. In this video, we break down the Q3 portfolio moves of Wall Street's top investors, analyze what this major divergence means for everyday investors, and stick around till the end. We'll also share the top 10 stocks institutions piled into this quarter. You won't want to miss it. If the past year felt like a group rally in AI, this quarter looks more like the afterparty where everyone goes their separate ways. First, the anchor. Warren Buffett's portfolio remains characteristically steady, though not without notable adjustments. Berkshire Hathaway was a net seller for the 12th consecutive quarter, buying about $6.4 billion in stocks, while selling $12.5 billion. Its total equity holdings now stand at $267 billion, with a record $381.7 billion in cash sitting on the sidelines. The most eye-catching moves? Buffett continued trimming Apple while establishing a brand new position in Google, large enough to break into his top 10 holdings. Specifically, Berkshire sold 41.79 million shares of Apple, reducing its stake by about 15%. Even so, Apple remains its largest holding, valued at approximately $60.7 billion. At the same time, the firm initiated a new position in Google, buying 17.85 million shares worth around $4.3 billion, now a top 10 holding. As Buffett approaches his eventual transition from the CEO role, markets are watching closely for any shift in Berkshire's investment style, particularly whether the next generation of leadership will lean more heavily into high-growth sectors like tech and AI. This major bet on Google could signal exactly that, a deliberate turn toward embracing technological transformation. That said, trimming Apple shouldn't be mistaken for a bearish call. Rather, as Apple's share price climbed, the margin of safety narrowed, making it a prudent time to rebalance, lock in gains, and secure profits. Beyond Buffett, Wall Street heavyweights this quarter are sharply divided. One camp, including names like Cathie Wood and Tiger Global, remains firmly in the AI believer camp. They see AI as a super cycle and insist that staying at the table matters more than short-term price moves. Cathie Wood's ARK Invest, for instance, continued betting heavily on the Magnificent Seven and high-growth tech names. She notably added to positions in Google, Nvidia, and Tesla, doubling down on AI, electric vehicles, and intelligent cloud themes. She also initiated a position in the newly listed crypto trading platform Bullish. Just this week, she bought the dip in Circle, the stablecoin firm whose shares recently tumbled, demonstrating her continued appetite for high-risk, high-conviction themes.